this is Dan Howe, PTI Securities and Futures, coming to you from the Wednesday, September 21st daily wrap-up. Overnight, markets were actually kind of tame. We only had a 13-point range in the S&Ps. We did come in a little bit down here today. Overnight, the Asia markets were a little bit up. European markets were down. The only fundamental news this morning, before the opening, was the existing home sales, which actually came in a little bit better than expected. Actually, they came in at 10 o'clock, 9 o'clock Chicago time. The big news of the day, though, was the Fed. The Fed actually was very much expected to do this twist maneuver, where they basically were going to buy long-dated options and sell short-dated options. Supposedly, to lower interest rates at the long end of the curve and flatten the curve. I'm not exactly sure anyone believes that. Coming into today, there was a survey of economists. 71% thought that they were going to actually do this, even before there was an announcement, and most of them thought that they would do it, and of course it would not work, which kind of makes you wonder why the Fed's doing it. There really appears to be two main reasons why the Fed is doing what it's doing, and this is Dan Howe's opinion, obviously. Number one is that nothing else is happening in Washington, so they need to do something. They need to tell the markets that they're willing to step in and do whatever they have to do, and they're willing to pull levers that haven't been pulled in 50 years. The last time twist was used was in 1961. By the way, it didn't work then either. So basically, they needed to do something here today. They telegraphed in advance they would do the twist. They did it. They also came out with a statement that was considered very negative. So it came out and said that there were worsening economic conditions. Pretty strong words for the Fed. And so even though initially the first tick up after they announced this was good, the market ticked up a few points, it started down and it really didn't stop. There continued to be 3 more dissents in this, and so that we haven't even gotten rid of the dissents either, so the board is still very, very much divided. The way we look at this is they're going to be buying $400 billion worth of long-dated, selling $400 billion worth of short-dated. So it appears that the other reason for doing this, other than to give the markets the idea that they will do something, is to, through the backhand, basically fund banks. Because with $800 billion worth of securities being bought and sold, even if the Fed asks for a commission discount, and I'm sure they're not because it's their buddies that are actually doing this, that $800 billion, even if they only charge a 1/4% commission, which is a pretty low rate for bonds, matter of fact, exceptionally low, so we're being extremely conservative here, these guys are going to get $2 billion worth of commission revenues in the next few months. Why don't we just write these guys a check? I mean, you know, we should actually get into the club, I guess, at PTI, but we're not one of the 20 dealers that do this. In any event, the market sold off and sold off hard, accelerated the selling into the close. Most of the volume happened in the last hour or two of the day, and it was pretty ugly. The S&P closed down 35 at 1166. The Dow closed down 284 at 11124. The NASDAQ closed down 52 at 2538. The 10-year note, the bonds, and the 10-year just took off today, so we closed at 1.87 on the yield. These are historic lows, so I'm not exactly sure how much they think they can push these things below historic lows, so it really doesn't even make any sense, the stated reason. I don't even know if anyone believes the fact that they're actually going to lower these interest rates. The dollar actually strengthened here today, but as in typical, since the economic conditions were said to be worsening, most of the commodities sold off hard, and gold was no exception. Gold closed down 21 at 1787. Basically, looking forward, this was the news of the week. We're going to get some jobless claims tomorrow, and we're going to have some industrial production numbers, but realistically, we're going to be trading off whatever reaction people happen to have to the Fed announcement and the Fed twisting. It's been Dan Howe, PTI Securities and Futures.